All right, let's talk about PagerDuty. You can think of them as the 911 for the internet. Seriously, when a website crashes in the middle of the night, they're the ones waking up the engineers to fix it. But here's the thing. This absolutely critical company is facing a huge puzzle right now, and that's exactly what we're going to break down. PagerDuty is in such a strange spot. On one hand, the company is super healthy financially. It's profitable, it's sitting on a pile of cash, but on the other hand, its growth has just stalled. It's slowed to a crawl. So what's going on? That's the mystery we're going to try to unpack today. So let's start with the first piece of this puzzle. Take a look at this number, 5%. That's how much PagerDuty's revenue grew in its latest quarter. Now, for a software as a service company where you're used to seeing these explosive growth numbers, something this low, well, it definitely gets your attention. But then you see this, $8 million in operating income for that same quarter, and that's real profit from their main business. So they aren't burning through cash, they're actually making it. You see the problem, right? How can a company be profitable but barely growing? To figure that out, we've got to look under the hood. Okay, let's pull back the curtain and talk about the PagerDuty Operations Cloud. You hear this term thrown around in tech, but what does it actually mean? What are we really talking about here? The best way to think about it is like the central nervous system for a company's entire digital operation. When something breaks online, a website goes down, an app crashes, anything, PagerDuty is the platform that instantly detects that problem, figures out who needs to fix it, and gets them on the case. It is absolutely mission-critical plumbing for our modern digital world. And here's basically how it works in 3 simple steps. First, it sucks in all the alerts and signals from a company's various monitoring tools. Second, it uses its intelligence to route that incident, the page, to the exact right person who's on call. And then third, it helps orchestrate the entire response, often using automation to get things fixed way faster. And their customer list is just a who's who of the corporate world. We're talking nearly half of the Fortune 500 relies on them. But, and this is a huge but, they're up against giants. Companies like Atlassian and ServiceNow who can just bundle similar tools into their much larger platforms. This competitive pressure, it's a massive part of this story. Now, let's get into the financials, because this is where that conflict between the slow growth and the solid profitability really comes into sharp focus. Just look at this. Last fiscal year, the company was growing at 11%. Now, in the latest quarter, that's been cut by more than half, down to just 5%. This isn't some gradual slowdown. This is a really rapid deceleration, and it's got investors pretty worried. And this slide right here, it pretty much sums up the entire dilemma. On one side, you've got that weak growth. Annual recurring revenue, that's the predictable income, that's the lifeblood of any software company, is only growing at 3%. But on the other side, you've got this silver lining. The company is profitable, it's generating cash, and it's even buying back its own stock. It's a classic standoff between value and growth. So how does PagerDuty get out of this trap? Well, their answer, like so many other companies right now, comes down to a massive strategic bet on artificial intelligence. This is their big gambit to completely change the narrative. And their ambition here is huge. This quote says it all. They want to be the AI ops control plane, not just a simple pager tool. The goal is to move way beyond just alerting a human. Instead, they want to use AI to automate responses and maybe even resolve problems before a person even has to get involved. Now, to make this whole AI vision work, they have to fundamentally change how they make money. So instead of the old model of just charging per person or per seat, the new model is all about usage, charging for automated actions. It's a bet that as their AI handles more and more of the work, the value they deliver is going to skyrocket, even if fewer people are using the platform directly. Okay, so this all brings us to the final showdown, the bull versus the bear case. Because based on everything we've just seen, you can build 2 very compelling and totally opposite arguments for where this company goes next. So first, let's look at the bull case. The optimists are pointing out that you got a profitable, absolutely essential company that's trading at a pretty reasonable valuation. They believe this new AI strategy is going to work, that it will reignite growth. And in the meantime, the company's using its cash to buy back shares, which helps support the stock price. The bears, on the other hand, see a completely different picture. They see a company whose slow growth is a sign that its market is saturated. They see those giant competitors who can afford to give this kind of feature away for cheap, maybe even for free. The big fear here is that PagerDuty just remains a niche tool, and a vulnerable one when companies start cutting their IT budgets.
So, how does this all play out? Well, the most likely scenario, with about a 50% chance, is that growth just kind of stays sluggish and the stock stays pretty flat. The bull case, where the AI strategy really takes off and the stock potentially doubles, that's got about a 30% chance. And that leaves a 20% chance that the bears are right. Growth slows even more, and the stock just drifts lower. And that leaves us with the one final critical question. You see, a value trap is a company that looks cheap on paper, but it stays cheap forever because it just can't find a way to grow again. PagerDuty has the profitability, it has the product, and it has a plan. But will its big AI pivot be enough to escape that trap? That's the billion-dollar question that the market is just waiting to see answered.